Hi, I'm Shyam Sekhar and I'm going to talk to you on your journey towards financial freedom. Since 2015, we have been running a mass movement of financial inclusion. Everybody is getting financialized. We have a bank account, you get insured, you start investing in mutual funds, you see opportunities across the spectrum. But just seeing opportunities is not enough. You need to make the most of it. How many of you have seen people who have grown from nothing to 1 crore of financial wealth within a decade? You don't see too many people. But the opportunity is ahead of you. Every one of you can think of reaching the magic milestone of 1 crore. You know something? Only 3% of Indians currently own financial assets more than 1 crore. So, if you get there, you are a part of a select set of Indians who are high achievers and who know how to turn their achievements into financial wealth. I'm going to take you on this journey on 23rd August in a short webinar. Register right away and join us on this journey towards 1 crore, which we think is your first big step towards bigger wealth creation. So be there, join us, and let's talk.
This Saturday at 11 a.m., we have 2 interesting webinars lined up for you. First one is on the topic Outlook on Thematic Mutual Funds. And the second webinar is on the topic the new consumption playbook. What's happening in Bharat and India? The registration links for these webinars are given in the description below. Hope to see you all there.
An NFO from a mutual fund house is something that interests a lot of people. Everyone is very keen to know about new fund offers. That's what an NFO is. And the NFO is structured to attract people because collecting money in an NFO has 2 sides to it. If it's a new fund house, it's a new beginning. It's a way of welcoming investors into the fund house. So a fund house which is new or which has got very few schemes doing an NFO is to welcome more investors into the investor family of the fund house. It's to grow the investor base of the fund house, to expand the reach of the fund house. But a fund house which already has numerous schemes doing an NFO has reasons very, very different. When a fund house has numerous issues already in the public domain, already subscribed and growing, doing an NFO is largely an economic decision. It is a decision that delivers better economics to multiple stakeholders. But importantly, it does not deliver the right economics to the most important stakeholder, who is the investor. And interestingly, I'm going to bring in this moral debate of subscribing in the direct option on a platform versus subscribing through a distributor. With respect to an NFO, there is hardly any difference in the support given by both streams. What does this tell you? This tells you that when an NFO comes, economic interests prevail, and there is economic interest for platforms in an NFO. Now, what that economic interest is something that varies from NFO to NFO, but there is an economic interest. But the most important person in an NFO, according to me, is the investor. What is he getting out of an NFO? First, he is subscribing to a product which is coming at the higher end of the expense ratio system. So the TER is always closer to the higher end of the band. Second, he is buying a product in which there is only a promise. He doesn't know the portfolio. Whereas if he goes and buys an existing product which has been in the market for a long time, which has a track record, he can see the portfolio, he can see the performance, he can see the fund manager, he can see how this product performed vis-a-vis its benchmark in good and bad times, and then buy the product. And more importantly, that product will be cheaper than an NFO. Yet, both streams, direct and distribution, are very, very supportive of NFOs because economic interests are always better in an NFO. That's the plain truth. Also, novelty which an NFO promises makes it easier to sell an NFO. The novelty may be in a theme. In some themes, the novelty actually works, like in defense it has worked. But the novelty will not always work. Look at what happened in other themes. Because most novelty comes in thematic NFOs. When the theme is doing very well, an NFO comes. So people who miss the theme want to participate at least now in the theme through an NFO. People think that an NFO is only at 10 rupees, so we are participating in the theme at a lower price. They don't think that they may be subscribing at 10 rupees in an NFO, but the shares are going to be bought at market price using this 10 rupees. Psychologically, they feel comfortable subscribing at 10 rupees rather than at a NAV which is much higher. These are all the reasons why the investor tends to be favorably inclined to investing in an NFO, even though an NFO is far more expensive to invest in for the investor. It is not just expensive in terms of expense ratio. You are giving the money. The next day, the fund manager will have to start buying, even if the market is very high. He can't sit on the cash for an endless period of time. Deployment compulsions start kicking in. He has to beat a benchmark. He can't keep cash because investor will question him. Why are you keeping cash? Why aren't you investing when the market is going up? I bought this team because it is very hot and you are waiting. I don't accept it. Put the money. Distributors may also want the same thing. Even fund analysts will question why money is not being invested. But if he invests the money and then later it goes down, he will be questioned for that also. So, damned if you do, damned if you don't. That is the position of a fund manager in an NFO. So, an NFO is an economic activity, largely meant to create fresh assets, to create fresh assets at a higher expense ratio, and to market novelty in the form of a theme, and to mobilize money from investors who have already invested in other themes by promising performance based on novelty. In a NFO, you cannot show past performance because there is none, but you promise future performance based on novelty. So even investors who generally hesitate to buy on past performance may be favorably inclined to buy on the promise of novelty. But in my opinion, none of these things work sustainably. An NFO can at best be a starting point of an investment, and you need to do a lot of follow-through investment subsequently. Whenever the opportunity is more attractive, whenever valuations come more in favor, whenever you find that the market is not positively inclined towards that fund for near-term reasons, and also when you have more capital to deploy and you find that particular fund very attractive compared to what it was at the time of NFO, and you are seeing better future prospects. So, there is a way in which you have to approach an NFO. I am not sure how many of you are approaching an NFO in the present context, because I am seeing a lot of money going into NFOs at a time when I would not invest in them. I would always wait for a portfolio to emerge, to settle down, to show promise, to show clarity, to give future visibility, and then I would invest in a fund. An NFO clearly can't give you that visibility, and you have to wait for the visibility. That is why I believe that waiting for visibility to emerge out of an NFO portfolio is always a better option than investing in a blindsided way in an NFO. The economics also doesn't support it, and sensible investment practices also tell you that make a small beginning if you want, but wait before you put big money. That's how you have to look at an NFO. An NFO for a new fund house is a compulsion. For a fund house with fewer schemes, it is a growth vehicle, but a fund house with multiple schemes, it is just an expansionary tool. So an NFO means different things to different people, but for an investor, it means only one thing. It's a blind bet. And I don't think investors should make blind bets in any investment without proper homework, groundwork, and clarity. So that is, in summation, what I think an NFO is, how it should be viewed, and why it is not the best way to start your mutual fund journey. Thank you for watching this video.